Just technical problems. Glad you're here. How do I shut the music up? Anyways, you probably can't even hear me. Is it too loud? I guess I gotta move stuff around. La 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 la. I like jazz music. Hang on. Guess I gotta shrink this. La 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 la. There we go. Hey, so we got inflation week going on, huh? So here's the general agenda for today that I propose to our community. We go through the calendar, schedule things out, retail sales, CPI. When are all these things going to be done? We can go through some of my charts. We can go through some of your posts, stuff like that. I did want to share an interesting comment that I heard over the weekend from someone that has studied 40 years of interest rates based on the 10-year T-note. I thought this was interesting because if anybody does 40 years worth of research, I want to know about it, especially if it's free, right? So what do you think the average rate is for the 10-year T-note? What's the average yield? Because it matters, doesn't it? To know where we are on average. You know, you could almost look at the average as being long-term. I mean, it's either long-term inflation or long-term output or long-term something, right? But it shows you, it gives you a benchmark. Are we below normal? Are we above normal? What would the policy be if we're below normal or above normal? All that kind of stuff. Turns out it's 2%. So Daniel got it. Good job. But is it real or is it nominal? Yeah, it's real, as Daniel says, adjusted. So how do you adjust it? How do you make it real? No, it's a calculation, bro. Minus inflation. Daniel's on top of this. Yeah, so what is the yield on the 10-year T-note right now? Right. OMO. Hey, if you don't know the answer, just OMO, man. Yeah, you got it. Okay. 2.8. By the way, 9 months ago it was 2.0. So anyways, 2.8. But what's the inflation rate? And then you're going to say, hey, well, depends. Is it CPI? Is it core CPI? Is it PCE deflator? I don't know, Wayne. What do you use? I don't know. What do you use for your inflation measure? Don't say the cost of VCRs. That may be low. Come on. Yeah. So, okay, there we go. So let's just say 1.8, Lester. Let's just make 1.8 since we're saying 2.8. So in real terms, where are we on this process then? What's the real rate? 1. What's the 40-year average? And you know, we're talking about like the 1980s crash, the 1990s crash, the 2000s crash. I mean, there's a lot of good data in there, right? So we could double yet, huh? It's interesting, huh? We got a long ways to go. Right? Inflation can still creep up. The 10-year T-note can still go up. We got a ways to go. The 10-year T-note could double or something to that effect. And interest rates could go up, or inflation can slowly go up and eat at that. But that shows you where we are. We're still below. We're still accommodative. We're not cooling off the economy. But why would you when you have the government suddenly cutting taxes and increasing spending exactly when the economy doesn't need it? It's kind of strange. I still wish Obama would have done a whole bunch of this stuff when the economy was at the brink of collapse. That would have been a good time for cutting taxes and increasing spending. But whatever. I'm just a dumb Canadian. So without further ado, let's get going, huh? Yeah, there you go. Told you the website's having problems. Click meeting. Come on, click meeting. Can't even play a YouTube video? What? Can you guys see the error message I just got? That's what I got when I tried to invite you. So thank you to all the people that showed up without even being invited. Whoa. But you know this is home, right? Alex says, wow, Trading Economics shows 2.1 inflation. Well, it begs the question, what do you, how do you measure inflation? Well, there are different measures. Okay? Doesn't matter. So anyways, life is great, life is grand, life is good, life is beautiful, oh, better give it all you got, gonna get what you give. Come on, everybody. So anyways, I can't roll the B-roll, can't play the B-roll. So that was the introduction. That was pretty good. So let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Alex's nice Rolex. Truth is, it takes me like, I can't see it anymore. So, but I had a blue shirt on over the weekend and it matched. What can I do? I guess that's why you got to wear the other one. It's like for blind people like me. So anyways, yeah, be careful with your money. Don't risk money you cannot afford to lose. Hello. My name is Wayne. That was a secret handshake. Oh, don't forget the pinky. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. If you're new to the family, new to these webinars, guess what? Visit TradersWay.com. Open up a demo account. Super quick, like a minute. Then you're in the back office already, right? You can do a couple of things in the back office. You can choose between a variable spread, a fixed spread, an ECN account. You can download our MT4 or MT5, I think. I don't even use MT5, but I think it's there. I don't know. Go in the back office and check it out. But the other thing is there's a little button in the back office and it says live webinars, and that's where you get here. So go ahead and visit that. I do these webinars 7:30 in the morning, Monday through Friday. Except the first Friday of the month that I do non-farm payrolls live, which I'm doing just shy, I think 142 months in a row now. I've done that. And you're like, 142 months? That's like almost 12 years. And I'll say, yeah. It's a long time for Forex, man. right? So I'm here. I'd like to share everything I've learned, and I'd like to see you become a huge success. Huge, huge. Maybe one day I'll invest. Maybe I'll be your client. You never know. So I want you to succeed, grow your trading account, grow your lot size, take care of yourself, take care of your family, take care of your loved ones, be an inspiration to your friends, give back, teach other currency traders how to succeed. That's what it's all about. So again, I've been doing Forex webinars now for like 15 years. That's a long time. It's longer than webinars. So anyways, here I am. Here I am. Will you send me a trade plan? Yeah. Here I am. All right. So, yeah, did you send a trade plan? I think we talked about it last week. You're going to get serious about changing the world by becoming a huge success. Hang on, that's not the take me to the right place, bro. Uh-oh. What? What? Something's happening. What? Did I lose you? Everything just went weird. Hang on. Will you send me an angel? All right, back to normal. Everything just went weird there for a second. I don't know why. All right, now I got to bring the webinar back up. Oh, let's do that. All right, everybody here? Everything, we're good? Things went weird there for a bit. Got weird. Cool. All right, good. All right, great. So, Warren and Joe, Ryan, Marina, 400 pips in the pocket with Gad Yen sell. Good for her, huh? Can you send me an angel? I'm not logged in. Joe! Okay. Anyways, cool. So we'll go through some of this. Are you guys paying attention to the live updates? So Olympia, been following the market live for you? Oh, everyone's got a black. Wow, huh? Hang on. Stop sharing. Yeah, Click Meeting's having a heart attack today. Sorry about. Well, I can't be sorry. I'm sorry it's happened. You should be. But you let me know. Okay, we're back to Forex.Today. I clicked on activity where you get the real-time Forex updates. Cool, 3 people like this. That's cool. So you are starting to use this, right? Olympia. So he's been following the market for 4 hours and giving you updates and such. And then he'll be signing off, and then someone else will be signing on. So cool. Right on. So I'm glad you like that. What I want to do now is I want to go to the calendar. Okay. We'll go through the calendar ex ante. We will, how do you want to do this? Let's sort this. I'm a busy man, so I only need to know the high impact stuff. And there we go. And you know what? That's not enough. I need more. I need more. I might have to put my glasses on. There we go. All right. You ready to go through the calendar? This is important. It's inflation week, right? Alrighty then. Which also means if you're doing non-farm payrolls, this is the week where the BLS, the Bureau of Labor Statistics, is doing the phone calls for the household survey, 60,000 households, right? And they're also doing the establishment survey where they're pulling payroll stubs and then doing their wicked voodoo magic and coming up with a non-farm payrolls number. So that's happening now, or this week anyways. I have three, check this out. I have 3 different days worth of coffee blended together. It's like Friday, Sunday, and today. Something like that. Yeah, whatever. Yeah. At least I'm off the heroin. Like, sorry, Trump, I can't take any of your 13 billion. All right. Okay, blah, 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 Swissy, yep, great. Was it Wednesday or tomorrow? Yeah, it's tomorrow, it's all pound, right? Pound Tuesday. FDI, I don't know if FDI is going to move anything. RBA speech, fine. U.S. budget statement, yeah, that comes out today. Great. No big deal. But there's going to be some mutual fund buying today, huh? I had an exam last night, 3-hour exam, macroeconomics. This one I didn't study as much for, and it's bothering me. But, right, I didn't do as well as last time. I only got 95%. Yeah. I'm telling you though, I'm amazed. Harvard is freaking difficult. Like, I'm telling you, I'm enjoying the class. Like, they're just rolling the stuff out, but in a half an hour, like the classes are an hour each, right? And I just, by the time we were half done the last lecture, because I also have recordings, right? I pause it and I sit back and I'm like, holy crap! What was covered in just that first half of that one class was like an entire class. Like, if you are not an expert in like the velocity of money, like beyond just know what it is, but you know, can do calculations and calculus of it, then you can't even keep up, and it's just coming through, and blah, 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 blah. And the mu of the Veda, I'm like, the mu of the Veda, what are you talking about? It's amazing, but I sit back like, I know a fair amount of macroeconomics and central banking policy, but holy crap, this is just, it's just coming at you like a hose, and you better know your stuff. And I'm already doing research for the big midterm that's coming up, because like oh my God, just, oh my God, it's going to be so ridiculously difficult. I know the general theories why, right, why the Fed would do one policy over another and stuff, but to do the crazy math behind it, wow, it's nuts, crazy nuts. So, wow, I'm freaking out. And if I'm freaking out, I think that's amazing. Like, I had to petition to get into this class, but what do the other people do? Like, I'm a full-time currency trader for 15 years. I watched the Fed. I actually watched the NFP. We're studying NFP, right? I know a lot about NFP, right? And he talks about it from a Fed point of view, which is really, 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 really cool. But what the hell do these other guys do in the class? You're like, I mean, right? I don't know what they do. Because I'm like, wow, I'm struggling. Like, I'm freaking out. And I know my stuff. So these other people, like, what do they do? Like, literally, how do they keep up? Tell you, I'm the biggest dummy in the class. No, I'm sure these guys are 10 times smarter than me or something. I don't know. So anyways, I think that's funny. Wow. Yeah, they meet in the, that helps. There's no doubt. There's no doubt. You know, to compete against a 20-year-old Harvard college student, I mean, they're no dummies, right? And the funny thing is, like, one of the kids, right, puts his hand up, and there's this complicated math on the board, and I'm like, I don't know what the mu over the theta is, and all of a sudden he starts throwing out this crazy question, and the professor's like, oh, are you a physics major? And he's like, yeah. Oh, well, that's a really great question. So if you take the time as the variable and you do this and do that and blah, 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 that would be the case, as you rightly pointed out. But we won't cover that. Like, freaking physics major? This guy's got a graduate degree in physics? And oh my God, I'm competing against this guy, and the guy's like, do the math and was already on to the next step. And I'm still caught on the mu over the beta. You know, the derivative of the negative alpha still makes me laugh. And this kid's like, oh, this is so easy to him. It's silly. It's like child's play. I'm like, I'm a big 40-year-old dummy. But anyways, how about the British pound? Yeah, how about the British pound? I might not be a smart man, but I know what British pound is, right? Holy smoke. So, inflation, remember why this was important. The Bank of England is trying to figure out what to do. Raise interest rates or not raise interest rates, or what is the, how quickly. Yeah, it's kidding. Yeah. You know, how does the Bank of England deal with their economic situation? I mean, a weak pound. Do they want a weak pound? You know, so this is where it comes in. The higher the inflation level based on a weakened currency, the more they're going to want to jack up interest rates, just simply to strengthen the currency and lower their inflation. Okay. Retail sales plays into that, because now we're talking not inflation, we're talking consumption. Yeah, Mike says a lot of those kids have calculus already. Well, and not only were they A students in high school and got an A, you know, an A in calculus, you know, so I guess it's a grad class. I was going to say they just did calculus like 6 months ago, right? But no, they're older than that, right? They're grad students, but I don't know. I guess it's, again, they're like, I don't know, I could be their dad. It's weird, right? I'm competing against dad or my kids or something. The professor's only 8 years older than me, no less than that. But you know what's really interesting though is the point of view of the professor from someone that has lived through various Fed policies. Like he's able to talk about how the Fed just used to have certain monetary theories, if you will, in the 50s, 60s, and 70s and 80s, right? And he could talk about like that. Not that he was there, but he followed it as a younger man, and then through his education and through his PhD and then his time at the Fed. So he's bringing all this in, and it's very interesting. So he says, well, you know, increasing the monetary supply, as you know, not only can it affect the base, but that's going to affect interest rates, and that will, in fact, and so he talks about that. Then he says, oh, well, back at this time, time like, let's say in the 70s, that wasn't well understood, that simply increasing the money supply will have certain effects in the economy. It wasn't the theory back then. And then he says, well, so Milton Friedman came along, and it was that theory versus these old theories, from the University of Chicago. And also he's talking about it in a historian point of view, if you will. And I've read Milton Friedman and a whole bunch of the other, economic philosophers over the last 300 years. So it was very interesting to just get it in like a timeline, right? And then it took the Fed a while to realize that a lot of what Milton Friedman did say, if you do change the money supply, but what he's doing is he's talking about the variables inside of a formula. So the small m changes the r, and and then that will change the I, and then, but I love sort of the historian point of view, which is really cool. All right, retail sales, so we're consumption, right? So now that's going to be a GDP issue. So now we're talking about productivity, right? And we're talking about inflation, two different things. This is the price level, and this is productivity or production, right? And then PPI, that's going to be the inflation, not that consumers face, but that producers. So if you're making goods, you have to buy input goods, like to make your widget and gadget, you might need some steel. Okay, so it'd be the steel prices. So the other way you can kind of look at it is the only thing that gets counted in GDP are things that were produced in this year in our borders, right, that are finished. So if you count a brand new house, the sale of a brand new house, but you don't count the wood, you don't count the nails, right? You don't count the hammers. Well, wait, you probably count the hammers. But anyways, you don't count the wood, you don't count the nails. PPI is like, well, what if the price of wood and nails is going up? Right, says maybe I'll get a guest lecture from Yellen. Yeah, she's looking for a job, right? Well, in a couple of weeks, I'm going to spend 18 hours debating the minimum wage with a woman that works at the Federal Reserve Bank of New York. She used to work at the Boston Fed. Now she's at the New York Fed. So I'm going to be locked in a room with like 15 or maybe 20 people and this Fed official. This is going to be great. So I won't run into Yellen, but I think that'll be a very interesting weekend. So it's Friday night, all day Saturday, and Sunday morning. Plus I have to do homework before I get there, and then I have to write an output paper, obviously, at the end. But it's kind of neat to like have open conversations with the people that influence policy. Yeah, but imagine if I was 22. I mean, it just, I'm so old. But, you know, if I was 22 doing this stuff, I mean, where do these kids go in life, right? Gee whiz. I'm just a creepy old man in the corner, right? Yeah, maybe. All right. So, anyways, then we get on to Wednesday. Okay, so inflation out of Europe. Obviously, this is going to be important. Industrial production, capacity utilization, all that kind of stuff. Now, Europe is really doing good, right? But remember what I've been saying for a while now. I don't know, a year-ish. There was a turning point when Europe troughed out. I'm guessing, what, a year ago or something. But the important part of that idea that it's not getting worse, it's getting better, is that if there's a cycle to what's going on, I guess you have to do it this way, right? The United States is probably 2, maybe 3 years ahead. When did I start seriously trading? Oh, I don't know. Yeah, it would have been 30. I never traded the stock market and stuff. You gotta remember, before I was a trader, I was a venture capitalist. So buying stock was stupid. What kind of idiot buys Google at $1,000? That's dumb. Why wouldn't you buy it at 80 cents and sell it for 1,000? You know, it just, flipping stocks just seems parasitical, if you will. You're like, you're not really, it doesn't even go to the company, right? Right? If I buy Apple shares right now, it doesn't go to Apple. I'm not contributing to iPods. I'm just paying some guy's commission somewhere. And then what? And then I sell it to somebody else. Like, to me, it doesn't do anything. I liked building companies. So I never really traded. The first stock I ever bought was Apple at $6, which wasn't bad. And then a couple of years later, I said, well, one day when I'm, more successful, because at that time I could only, I didn't have any money, right? So I'm like, so I bought some Apple shares. And then I'm like, one day when I'm old and wise, I'll probably know a lot about wine. So I went out and I taught myself wine, like I taught myself Forex. And then I said, I am going to buy 2 bottles of wine, and just to hold. I'm going to collect wine. I don't have any money. So I scraped together like $200, which is like a huge amount of money, right? And I'm going to buy 2 bottles of wine to collect now that I've taught myself everything about wine. So I go buy 2 bottles of wine, a white and a red. The white, a year or 2 later, was put on the cover of Wine Inspector magazine and was declared Wine of the Year. Boom! The second one has gone on to become the first cult cab of Napa Valley. Boom! And then, the day after Steve Jobs dies, I sold my $6 shares of Apple for like $750 or something. So I bought a stock that was from a company that was basically bankrupt, and it grew to the biggest company in the world. And then my 2 wines became collector's items. Yeah, so I'm like, not bad, right? Not bad. So what age did I start trading? I don't know, are those trades? I made 10 billion% on Apple. Not bad. The Midas touch. Well, the thing is, I didn't know anything, so then I did my research and became an expert. So imagine that was 1996 or 97? 96 maybe? I don't know. Okay, so anyways, then we get on to the good stuff, right? USD retail sales, as we know, that's consumption. CPI is, you might want to look at the core to give you kind of a better assessment. We used to look at core because oil prices were too high, but then last year we'd look at core because oil prices were too low. It was funny, core was lower than headline, which is just nuts. We came out of a really crazy time, guys. So anyways, we'll look at our CPI, which is really great, blah, 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 blah. And what do you think? Aussie jobs? So Wednesday is great. Tuesday is all about pig. Today is kind of like a rest day, but a great time for mutual funds to buy the stock market when there's going to be low volatility. Initial, fine. Philly Fed, fine. Industrial production, capacity utilization, great. And a nice little Friday. You know, the news on Friday, you know, it's all fine. It's just kind of like greasing the skids, you know. It should be an all right Friday for trading. So that's pretty cool. Cool. Thanks for posting that, Ryan. I just noticed this. You did it several weeks ago, but central bank releases. Cool. Yeah, did I drink any of the wine? No. The red I still have in my cellar with a few others that I've collected. But I threw a party many, many years ago. It was maybe 3 or 4 years after the white became the wine of the year. I had the cover framed and everything because I was so proud, and it was there in a cabinet glowing. And some dudes came over and brought some chicks, and I'm hosting and I'm running around making sure everyone's having a good time. And I come back because there's tons of things to drink, right? And I'm like, is that my bottle of wine? I could just tell, right? I'm like, is that my Chardonnay? And I went over and I turned it. One of the chicks, some dude brought over, is like, I don't like this and I don't like that. Oh, what's in this glass cabinet? Ew, I don't like it. It's warm. And then left it. Didn't even drink it. Took a sip. There was some lipstick on it. Took a sip. Oh. You should have seen me. Oh, you're kidding me. Yeah. No, it's just like, so I drank it. Oh, I still remember. Oh, so yeah, I had the Chardonnay, but yeah. So I went OJ on her. Yeah. All right, so moveon.com. Let's see what we got going. We got charts okay? Can you see that? Cool. Yeah, so the wine, what's my cab? I think it's an estate, Bellevue Vineyard Estate, never sold in a store, estate bottled, 1992 cab. But you have to look it up. It's a specific one, and yeah, it's considered the first cult red of Napa. I had to buy it. No, it's before that. No, it's before that. Yeah, 10 GS a bottle now. Yeah, no, I think this bottle was 100 when I bought it, and I could probably sell it for 15 times that. But it's a little old, so I might have to actually open it and drink it. But that doesn't sound right either. So I think I'll just keep it. Just let it get really old. But if I open it, it may even be spoiled, right? Who knows? So I'm like, I think it's better to have it on the shelf. Besides, I'm building a walk-in wine cellar, so I have to put it in there. All right, so let's go. That is where we are. What do you think about that? Yeah, it's really disappointing because I could see what I would have liked to have done on Friday if I could do the swing stuff. But anyways, it's a little dangerous of a setup, okay? But the swing that you would have had, I say dangerous because it's counter. Okay, that's the swing setup. That's what would have been given to you late Friday, early Monday. Doji-san, what a huge cup of coffee. Yeah, here's the best part of my huge cup of coffee. Yeah. Mommy fuel. Hey, man. Whatever. So, you see what I mean? It's counter, so it's going to be dangerous. The only other choice you have is to get ready for a sell now. Okay? And that was your choice Monday. Up, or down. So if you are a burr, you're going to meet down in here. But based on the moving averages, you got to be careful. So let me do this in the second color now. If you're a bear, I think what you're going to see is it's going to come up. It's going to meet the 55, but what does the 55 tell you? If you're a bear. Of course, Brooke. See, Brooke, we already knew this, right? We already talked about it for the last 2 or 3 weeks, or maybe even a month. So I don't need OPEC to tell me. I already know. I told OPEC. They called me up. Yeah. So anyways, it's nice that it's confirmed, right? Yeah. So anyways, you guys are right. The 55, which is moving, is going to meet us around here, and then it's going to drop, and then maybe rally through the 55 back up to just start climbing, right? So of course we don't know if any of this is true. I'm just reading the notes on this sheet. right? I'm not Beethoven, but I can play Beethoven, which is actually true. Right? So I don't know if it's going to happen, but that's what it tells me. 4-hour candles, it wouldn't matter, right? You want to see it on the 15-minute chart? I'll do that for you too. Here's the 15-minute chart. You ready? There it is. That's a 15-minute chart. Now that's detail, huh? Seems legit. I need the one. Yeah. Oh, I had such a long weekend. Oh. Let me tell you though, I left Atlanta. It was in Florida, and I'm like, oh, it's nice here. You know, if you have a lot of money, Florida seems to be a nice place. It was just so nice. And then I come back to hot Atlanta, and it's freezing and it's raining, and I'm like, ugh. Yeah, sorry guys. I'm getting like 3 hours sleep. I got 5 hours sleep last night, so I feel good. So anyways, so there it is, whether you're a bull or a bear, and that's why I was saying it's kind of dangerous because the opportunity was there if you were taking it, and now if you're in it, you're probably not profitable enough to really jam your stop at break even, but now you're going to face some risk. So he wants, in regards to maybe starting some sort of service and stuff, and I'm just don't have time. So I'm trying, man. I'm trying. Mickey Goodson, yeah. So we don't know. So the other way this could play out then, I mean, you got one team that wants this, and the other team wants that. The rest we don't really know, right? But the 55 suggests that there's also a maybe on this. And that's all it tells me. So you can see bullish is more certain, but it's going to take some time. That's why I kind of think the double bottom plays out. But remember, technical analysis doesn't create any of this. If there's a reason for the dollar to get ripper strong, it's going to get ripper strong. It doesn't give two hoots about this other stuff, and it's going to drop to this green zone. So that's that, right? Remember, don't get too caught up in technicals. You need to have another layer of complexity in your analysis. Ask yourself, what is the reason? Okay. I am here with you. Now, come on, tell me, aren't you super happy? Look where we are. I mean, it's all good. All right. Let's check this out. This is all off of our double top. It's been, what, 3 weeks now? Pretty cool, I think. Right? There's the double top. There's the second chance entries and stuff. Down, 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 down. Next level is here. This was an old arrow. I got rid of the line. And then what? Well, let's put this into like a context on a daily. That's some big trend here. So higher high, higher low, higher high. You okay with that? We play it like this, play it like that, and then up, which means next month. You bet, Ron. Anything for you, buddy. Ooh. Neat, right? Because you can see it, I think, right? Maybe I should draw it. Man, I'm going to have to eat, man. I'm going to have to eat. See what I'm talking about? But that could be, I mean, it may take a couple more weeks, right? There's also this going on too, right? So, I mean, it could do this almost as easy, right? Okay. I hope that puts it into context because on the way up, people were really concerned, like, why is the dollar weak? And now it's strong, and I don't know, maybe even the strength is overhyped. I'm not sure what you read and stuff or watch or hear. But the way I look at it is this is still an uptrend. Things are still overpriced in the United States in general. We're years ahead in the cycle. Macroeconomics is pretty good, or actually quite good. So I'm still a US dollar bear, but not at the moment. So I still look at these charts and say, well, to some degree, I'm expecting a higher low. But we're looking at it now on a daily, right? So it could be a week or 2 weeks, right? Okay. Okay. So you think this is a coincidence? This is a 5-minute chart. How many people think it's a coincidence that all that happened at the central pivot point weekly? Cool. Right on, Brooke. I think I would have got suckered into this. That's what happens on the smaller time frames. There's a lot of wiggle room, right? So yeah, my stop would be right where I'm kind of doing this. And I would have been expecting this. But that's why they invented stops, right? And so at some point, right, I'd move my stop and just move on to the next trade now. Okay. You are not alone. How are we doing on gold? Let me zoom in. Maybe 4 hour. It's looking pretty accurate, isn't it? So far, you can see, or I hope you can see, this entry. So if you're a bear thinking that, you've had your chance. Complicated stuff. Down, 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 up, sell. Down, 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 up, sell. Right? Even this mini one in here is straightforward. Down, 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 up, sell. down, 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 down. On a smaller time frame, you'd probably consider this a 3-wave correction, right? And now your resumption of your 5-wave. I don't know what you would do, but anyways, it's still a downtrend, and I think we have it mapped out pretty well. Looks pretty legit. Peso, don't care about this time of month. Oil. So oil's hitting my target for the month. You're welcome. Right, you remember? Double top. So it's either going to fall here or it's going to fall here. Right? This is what I teach you. So now, if that's your top, right, so you have to decide, do you count that as your top? But anyways, if that's your top, the theory I teach you is that this is the target. And the low right now is here. No, Russell, no, those don't typically last too long. They can last, but I think I got knocked out at the first level of support. And then I can't remember, but then I think the dollar got super strong and rallied me out. But check that out. That's neat, isn't it? So I get to this point, then I don't have anything really more to say about oil. Sucks though, right? Because it's only the middle of the month. It's not even the 15th yet, and I'm like, so I don't know what to say about oil now. Neutral? Maybe, yeah. I feel like, I mean, it's almost the middle of the month, right? So that feels pretty wishy-washy. Okay? Like, it's not too early. I mean, it's the middle, so I'd say, I don't know. I don't know. It did what we thought based on the analysis, and now we're kind of like fitting it into something else. But I don't feel like squeezing it into a situation where it goes back to the central. It could. You might watch CAD if that's what you think. Right? So maybe start looking at CAD yen, CAD Swissy or something. But I don't know. Play it out as you want. I just find I'm like, nah, I don't know. I don't know what to do now. So if it's not easy money, then why would you take the risk, right? Right? It's like Russian roulette, right? One's got 4 bullets, the other one's got 3 bullets, and you're like, what's my third choice? what was number 3 again? Yeah. They're like, no, it's only 2. Don't really like either choice, friends. It's not an easy decision. Well, I suppose it still is, but it's not a comfortable decision. So anyways. Tell you what, let's leave it at that. And tomorrow, okay, I know we've had a weekend. Tomorrow, I want to go through your trade plans. Okay? I didn't have time today. I want to do that tomorrow, a prime focus. So there's 75 people in the room. Can we have a few dozen trade plans? Could, right? One trade plan per person. And we'll go through. Well, tomorrow's webinar. okay, so I'll have the programmer look into that. I don't know why some people can do it and some cannot. So I get thrown off on that. Anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Thank you for showing me loyalty and respect every day. I really enjoy our time together, and that's the truth. And thank you very much for being a client at TradersWay. Okay? See you tomorrow. Cheers.